Welcome to Coin Pulse News. Bitcoin is up 106% this year. Is it just spot BTC ETF hype? While most observers tie Bitcoin's recent strength to the anticipation of a spot ETF approval, some analysts offer alternative explanations to the crypto's rise. Bitcoin rallied past $34,000 this week and is up 106% so far this year after 2022's grueling grind lower. The latest surge supposedly happened on excitement around a potential spot ETF approval, but are other factors at work? Constrained supply, underinvested market participants, and Bitcoin's rejuvenated shine as a safe haven from troubled traditional markets and geopolitical turmoil are catalysts worth considering. Bitcoin, BTC, managed a monster rally over the past week on two spot ETF stories that turned out to be complete fugazis. That the price has barely pulled back even after the fake news was outed suggests maybe it's not ETF anticipation driving the surge higher. To review, Bitcoin plodding along in a very tight range of roughly $27,000, $28,000 for weeks on end, was jolted above $30,000 10 days ago after a false tweet that BlackRock's spot ETF application had won the SEC's approval. Within minutes, the tweet had been revealed as a mistake, and Bitcoin quickly gave back some, but not all of its gains. Then early this week, some observers noticed the ticker for BlackRock's spot Bitcoin ETF IBTC showed up on trading clearinghouse DTCC's website. Market participants read the news as signaling imminent SEC approval of the fund. The bullish signal caught shorts and dealers off guard, leading to a price spike to $35,000 Monday evening. By Tuesday evening, though, it was revealed that the IBTC ticker had been on the DTCC site for months and meant literally nothing with respect to whether a spot Bitcoin ETF might be coming or not. Yet, the price of Bitcoin remains very close to Monday's high, and at the current $34,400 is ahead nearly 30% over the past 10 days and more than 100% for 2023. Some analysts argue that Bitcoin is in demand as a safe haven asset, noting prolific government spending and associated rising debt levels, shaky stock and bond markets, and the crypto's increasingly constrained supply. In March, Bitcoin jumped from $20,000 to around $28,000 during the regional banking crisis in the U.S., which saw the downfall of Silicon Valley Bank and Signature Bank, among others. The recent crisis in the Chinese shadow banking system may also have helped Bitcoin in a similar manner, Switzerland-based investment manager 21 Shares noted in a report last week. The report explained that following the bankruptcy of Chinese real estate giants Evergrande and Sunac, the People's Bank of China (PBOC) earlier this month injected the equivalent of over $100 billion, the most in 3 years, in lending facilities to shore up liquidity in the banking system. When the PBOC intervened in January 2020 by lowering the deposit reserve ratio for financial institutions, equivalent to a $115 billion capital boost for the Chinese economy, BTC gained 13% and active Bitcoin addresses rose by 48%, the report pointed out. As long-term bond yields have surged to near 5%, some banks are sitting on massive amounts of unrealized losses on bonds, fueling concerns about the health of the U.S. banking system. Indeed, Bank of America last week reported Q3 losses of $131 billion in its held-to-maturity portfolio. Stock market investors have taken notice, driving its share price down nearly 8% over the past 5 sessions and 24% year-to-date. Almost 70% of Bitcoin supply hasn't moved in a year.